It's muted. We can't hear anything.
Thank you. Hello, everybody. Welcome to Krishak. So I'm so sorry. My apologies. So need I say much about Krishak? He's amazing, phenomenal trader, investor. We've missed you so much. Thank you for being here. And over to you, Krishak.
Hello, everyone. Good morning, good afternoon, good evening. Everybody on the call. It's been a while since I spoke to everybody from the QBN community, and it's good to be back again to see a lot of faces who used to join the call before, and I hope everybody's doing well, everybody's fine. This session is going to be a bit different from the usual sessions that we have. This session is more going to be about, what is investing? What is the difference between investing and trading, and how can you take advantage of the markets when you look at the markets? For example, actually, a lot of people are really confused between whether they should be investing or whether they should be trading. Let me share my screen with you and we can go over it together, right? Feel free to again ask questions. The chat box is open, I assume. This is going to be a very interesting session. Uh, Series of four again. This is the first session, and let's deep dive into the main topic today, which is going to be investing versus trading, right? Let me ask this question to everybody, and any feel free to answer again. This is the chat box is open. This is more like an interactive session, so feel free to answer, folks. Um, if I gave you $10,000, right? The question is, if I give you $10,000 today, would you invest or would you trade? Um, Let me know what your opinion is. You can unmute yourself. You could also drop it down in the chat box as well. That's the first question. If I give you $10,000, would you invest or would you trade? Invest in QBN. Very good. Invest. Very good. Why investing and not trading? Why do you think that investing is much better than trading, or is it much safer than trading? Is it because you lose a lot of money in trading? What is the difference? Trading is higher risk, absolutely. High risk, high reward, right? Which is high risk, high reward. Whereas investing is a little bit more of conservative side. So let's discuss about the difference between trading and investing. Now, a lot of people usually, when they enter the financial market, they think about investing and trading are basically the same thing. No, they're not the same thing. They're actually not the same thing, and they have their own different objectives and different time horizons, different strategies, different risk profiles, and most importantly, different mindset, right? These are the main differences between investing and trading is your time horizon, your objective, your strategy, your risk profile, and your mindset. Mindset is the main thing, and this is what we have been discussing in the previous sessions as well, that mindset is one of the most important thing when it comes to trading and when it also comes to investing, right? So here's what investing and trading is. So when somebody would like to decide whether they want to invest or trade, investing is more of long term, right? It's more of long term. You have a growth mindset. Um, you have a growth mindset. It's less risk involved. So you have lesser risk involved. You have benefits of stability. So there's stability in investing. It's more of fundamental analysis, meaning more of news. You have to stay updated to the news, what's happening with a particular stock, what's happening with, with gold for long term. So when it comes to investing, you need to read a lot about. fundamentals. You need to know how the company is operating. You need to understand if you're investing in Apple, for example, you need to know ins and out of invest of Apple. Sorry, you need to know ins and out of Apple. How many employees are there in the company? How many what are the new projects? Are they working on AI? Are they not working on AI? Are they building a new product? Are they coming out with a new project? So on and so forth. So that's more of fundamental analysis, meaning deep dive into the company, whereas charts are not required. You don't really need to look at charts. You only need to look at charts when you enter, but you don't really need to look at charts. You only need to look at charts when when you want to look at the price, when you look at the historical data, that's when you look at the charts. Trade investing is more of identifying if the stock is good to hold for long term or not. So you're technically buying and holding for years and years and years, right? More like your retirement portfolio, right? If you want to retire, you can then sell off all your investment and just live off the profits that you've made over a long period of time. And it's best for growing capital, which is long term, which is of course long term. When it comes to trading, trading is more of short term, right? You have short term profit and losses. You lose money and make money in period of time short period of time. So you make money and lose money in short period of time. More risk involved. You have more risk involved, as Shadia said, that there's more risk. You need more technical analysis. What do I mean by technical analysis? You need more of chart reading. So you need to read the charts. You need to look at, how the markets are moving. And you can now, when it comes to trading, this is the best part about trading, and this is what I like about trading. I've been trading for the past 7 to 8 years, and this is what I really like about trading is you can make money when the market goes down and when it goes up. Whereas in investing, only make money when the market goes up. This is the main difference. You only make money in investing when the market goes up. But in terms of trading, you make money when the market goes down. You also make money when the market goes up. Trading needs skill. Investing, you could use the skills of the company you invest with. You're absolutely right. Trading requires skill, and trading is one of those skills that everybody should learn. It's not that they should start trading full time, right? Start trading to earn your passive source of income because anybody who's doing a 9 to 5, anybody who's doing a 9 to 5, their active source is, of course, their job, right? Active source is their job, of course. Whereas for passive, what are you going to do from 5 to 9, right? What they say is 9 to 5, do your job, but 5 to 9, work on your skill, work on improving your skill. It can be anything, right? So if anybody who would like to get into trading, 5 to 9, 5 to 10, work on improving your trading skill or investing. So investing is if you're getting into investing, learn more of fundamentals, learn more of understanding how a company works, right? What is PE ratio, which is price to earnings, what is PS ratio, price to sales, PB ratio, price to books. Everything comes in investing because those are numbers. Trading is more of reading the charts, analyzing the charts like this. This is the analysis I have on my chart for gold, for example, right? These are the levels that I have marked. How have I marked these levels? By understanding technical analysis, which is make money in short term, make or lose money in short term, right? This is more of understanding the technical side of it, and it's more of trading. Any doubts between investing and trading, folks? Feel free to ask your questions. The chat is open again, so any doubts? Okay, I think everybody is okay. No more questions. Okay, let's move on. Let's understand if anybody wants to invest, what should be their investing portfolio look like, right? How would their investing portfolio look like? You have multiple options to invest in. One is, of course, stock market stock. So you buy an individual stock. So you buy an individual company and then you hold it. So now you are a part owner of the company because you bought the stocks. The second is bonds, which is the government bonds, right? Let's call it bonds, right? Which is government bonds, right? You pay to the government, and in return, the government will pay you interest. So these are your government bonds, where where you give them money for probably like 5, 10 years down the line. Buy an index fund, you buy an index fund, right? So you invest in an index fund, right? So index fund is more of like S&P 500. If you want to invest in S&P 500, what is S&P 500? Let's understand that also briefly. S&P 500 is top 500 companies in the US. So if anybody who does not want to buy individual stocks, like they don't want to buy Apple individually, they don't want to buy Meta, they don't want to buy Microsoft individually, Google one stock at a time, they could invest in something called as an index fund. What is an index fund, folks? Is index fund like S&P 500. It's top 500 companies in the US. There is a fund. It's called SPDR. The fund's name is SPDR. So what happens is, for example, if you invest $1,000 in SPDR, it gets segregated. It gets equally divided amongst the 500 companies in the index fund. So now you don't have the need to buy individual stocks. You could directly buy the entire index fund. This is the advantage of buying an index fund, that you buy the entire thing. You don't buy individual stocks. There are a lot of index funds, right? You have SPDR, you have VOO, there are n number of index funds. Depending on what your broker gives, there are n number of index funds. Of course, you have real estate as well. Real estate, anybody who does not want to buy a physical property, they can buy REITs. There is something called as REITs. REITs is buying real estate online, meaning you you own a part of the real estate. You own a part, or you own a share of the real estate. You don't own the entire property. REITs is a scheme where you can buy real estate online, but you only own a part of it and not the entire property. So when the company makes a real estate sale, REITs go up. When you buy the REITs, your investment as well goes up. So technically, you're not buying a physical property, but you're investing in real estate. This is another way of investing in real estate as well, through REITs. It's called REITs, REITs. And this is very new in the markets. A lot of people don't really have an idea about REITs, but REITs is slowly getting popular and popular and popular. And then, of course, you have the good old gold. Uh, how often, there's a question by Abrar. I have a question regarding how often you trade in a month. Please reply at the end of the session. Now, Abrar, it really depends on the asset that I am trading. It sometimes, again, for me, trading, it depends on what exactly I trade. If I'm trading gold, I trade probably like I place 2 to 3 trades a day. If I'm trading, crypto, then I'm just placing one position a day. So it depends on how I usually place my positions and depending on the market conditions as well. Folks, I think my screen is frozen because I'm not able to access my screen. I may need to leave and join back in.
That's can you hear me? I'm not sure if
I can
I've got my camera on, but I can't see myself, so I wasn't sure.
I can hear you, but my trading view is frozen. I can access Zoom and I can access everything. I'm sorry, folks, but yeah, my trading view is frozen. I'm not sure if it's the same for everyone.
Yeah, I can see your screen active.
Yeah, but I'm not able to click anything on my screen, actually. Not able to type anything on my screen. Folks, I'll just exit and then be back just in a second.
Sure. The screen's still there, so I'm just going to override that. I guess while we're waiting, we need to keep everybody entertained. Right, so he's just restarting his computer. That's probably one of the reasons why it froze. So the whole idea for these sessions shifting away from just trading was essentially because we wanted to bring to you a bit more information about investing. Not everybody wants to be a trader, and it's not necessary. I know there are many of us who want to know a bit more about investing, different ways of investing, and how we could benefit from that. So this series, we sort of let's play around with the audience and give them what they want. So if there's anything else you would like to learn, use the chat box now and you can pop it in there. We always like to take the feedback that is beneficial to everybody, because that's what the purpose of all of our sessions are, to add value to our members and those who perhaps join that are not yet members and may choose to become members. So Krishak is joining back in. I've just admitted him to the room. He will just need to be made co-host. So Natasha, when you see, yep, he's co-host now. So hopefully he will be back on the main floor. Thank you for that. So yeah, these sessions are for you to be a bit more aware of where you may want to ask a question about where is it good to invest and so forth. So Krishak is back.
Hey, so I'm so sorry, folks. I'm not sure what the glitch was with regards to my side, or was it with TradingView, but we're back on. I'm sorry. Thank you for waiting, everybody. All right.
So while you were away, we were
Let's
just saying that partly why we've tweaked the sessions to learn to invest, because not
Mhm.
everybody wants to trade. So if anybody's got anything that they would like to know, then feel free to put it into the chat. We are here to serve them as QBN members, so it's always valuable to get everybody's feedback. And then you came back, so just to bring you up to speed. So thank you, welcome back.
Brilliant. Thank you. Thanks a lot, Shazia. So let's get back right into the session. Is now again we were discussing about investing, different types of investments. As to you have stocks, bonds, index fund, REITs, real estate, and the last point was I was mentioning about good old gold, which is what I have. This is what I trade in. This is what I usually trade in. So, and this was the question that Abrar asked as well, as to how often do I trade. So it entirely depends on how the market opportunities are in the in the market over a period of 1 month. This is what happens with investing. Whereas for trading, you have n number of options, right? Let's go over trading. For trading, you have stocks. You could trade stocks. You could trade futures, you could trade options, you could trade commodities, crypto, and you have foreign exchange. And you have foreign exchange. You could trade all these things. So trading is more of short term, and I know a lot of people would love to know more about investing, what exactly investing is. But just to give you an idea, trading can act as your passive source of income. You don't really need to, trade the entire day. This is what a lot of people do. If you look at it, if you look at somebody online, they trade the entire day, right? They promote trading should be your full-time job. Well, start trading as your part-time job. It is not your full-time job initially. Speed up slowly and steadily. You don't need to figure this out in day one. You don't need to figure this out in the next, 6 months. Take your own time to learn the skill, because it's a skill after all. As a lot of people know that trading is a skill. Investing is an art of patience. Trading is more of risk management, managing risk. This is what trading is about. Because in trading, you're holding a position for short period of time, not for long term, right? So let's say for investing, folks, if I gave you 10,000 today, right? What would be how much money, if anybody can answer, again, it does not have to be an exact number, right? If I give you 10,000 today and you make 10%, right? If you make 10%, what would be your total? And you keep compounding, right? And you keep compounding, and this is 10% annually, right? You make 10% annually. This is on annual basis. How much are you gonna make? You're gonna be up 11,000, right? And then the next year, you're gonna be up 12,100. The third year, you're gonna be up around about 13,300, 13,310. This is your compound and consistently making 10% every month, right? But when it comes to trading, let's do the same example in trading. In trading, if I give you $10,000 and let's say now in trading, you have higher risk, right? You have higher risk. Why do you have higher risk? Because of leverage. Anybody has an idea what leverage is? I would like to ask this question to you folks. What is leverage? What is leverage? Anybody can answer. Ability to trade more than you have. Okay. Abrar says ability to trade more than you have. Jetli, I do see a question. We will take your question towards the end of the session as we finish this topic. Abrar says in terms of quantity, yes. So Abrar, if I ask you leverage, would you say that you could trade more than $10,000? With leverage, can you say that you could trade more than $10,000? Let's say you only have $10,000, right? But with leverage, can you trade more than $10,000? Shazia says borrow ratio. Yes, you're correct. Shazia says borrowing from who? Borrowing from the broker, right? We borrow from the broker. If you have leverage, we borrow from the broker. So when we talk about leverage, leverage is technically borrowing from the broker. This is what leverage is. We borrow from the broker. So when we have, let's say, $10,000 is ours, the broker says, hey, I will give you some amount to trade with. I can give you 5x your trading capital. When the broker says, I can give you 5x your trading capital, now our total buying power, now, folks, is going to be $50,000 because of leverage. So now we don't have 10,000, we have $50,000 to trade with, right? And since we are trading, we can make 10%, we can make 50%, we can make 100% because of higher risk, higher reward. So in terms of trading, you cannot really say that this is how much money I made, this is how much money I'm making consistently, because the numbers fluctuate every month because of your trading capital and because of leverage, right? So, as I mentioned, don't rush into trading. Trading is something that people should take it slowly and steadily. And this is the difference between investing and trading. Investing is more of, you compound. You compound more of, you compound your capital, right? So when we talk about investing, investing is more of long-term wealth. Long-term wealth. Trading is all about chasing quick profits, but takes time. But it takes time, right? When I say chasing quick profits, don't look for positions, don't look actively for positions, but we are here to make quick money here and there. This is what trading is all about. Now, let's take one question that we have. Good to see you as well. Um, it's been a long time, everyone, and we have a question by Jet Li is what is the biggest mistakes beginner make in trading and investing? The biggest mistake people make in trading is that they want to make quick money. They want to make money quickly. And the biggest mistake they make in trading is that they want to start seeing the stock move really fast in their direction, right? Or what they do is when they see a loss in investing, they cut their position. That shouldn't be the case because you're investing for long term. If you see a loss in investing, double it down. You have to double it down in investing because you're holding it for long. In trading, you cut the loss because trading is more of, you're only here for a short period of time. Investing is more of you're holding it for long term. So let's say if you buy Apple at 200 and if Apple dips down to 180, don't cut your position. Do not say that, oh, Apple is going down. If Apple goes down to 180 in terms of investing, buy more. In terms of trading, cut the loss. Right? Apple dips down to 150, investment, buy more because you're averaging down your cost, you're averaging down your price. So if Apple goes from 150 to 180, you will make money. Apple goes from 180 to 200, you will even make more money. Apple goes above 200, you will make even more money because now you're compounding slowly and steadily. You're in for a long period of time, right? Because in investing, you are not using leverage. You're only using leverage for trading. You're not using any buying power. You're not borrowing from the broker because in investing, you're only using your money. So there's no borrowing involved in investing. Any doubts, folks? I think everything seems to be clear. Let's go to our final topic for the day is how global markets are connected. Let's go to a final topic of how global markets are connected. When you talk about global markets, now global markets, let's start with the US dollar, right? US dollar. US dollar is the most important variable in the global markets. US dollar is the most important variable in the global markets. The reason why is interest rates, USD, bonds, stocks, gold, crypto, everything is interconnected. This is a chain, right? This is what the chain is. So if interest rates go up, right? Let's say let's take an example of if interest rates go up, USD goes up, gold goes down, stocks go down as well because everything becomes much more expensive. Everything becomes much more expensive, right? Because depending on how, because if you look at the US dollar is on one tangent and gold stocks they're on another side of the line. So it really depends on how you look at the markets. But this is the general formula that if dollar goes up, gold goes down, stocks go down because they're both in end of the spectrum. They're both in two ends of the spectrum, right? Gold does not like expensive money. Gold does not like expensive money. When interest rates go up, technically you have to pay more for what you borrowed. This is what it means. When interest rates go up, you actually pay more when you borrow, right? That is why it is a little bad for people like us, retail investors and traders like us, who wants to take loan from the bank, from the government, because now we have to pay more if interest rates go up. Interest rates go up, what happens to inflation? What happens to inflation? Inflation goes up. What is inflation? Let's understand inflation. What is inflation? Inflation is changes in price of goods and services. Interest rates go up, things become more expensive, inflation goes up. Let's say in the US, the gas was $3 and let's say around about 25 cents. 3 months ago, what is the price of gas right now? $4.60 per gallon. Why? Because of the war, inflation increased. Inflation went up. Inflation goes up, things go up. Your grocery items go up in value. From $2, you may see, oh, it went up to $2.50. It may go up to $2.40. This is because of inflation going up. The current interest rates for the US, the current interest rates for the US is 3.75%. The current inflation for the US, it went from 4.2% down to 3.5%. It went down. When inflation goes down, interest rates will also go down or interest rates will be steady. Interest rates came out yesterday and it was unchanged. interest rate stayed unchanged. There was no change in interest rates because the inflation went down. The US wants the interest rates to go down to probably 3% or around about 2.75% and inflation to 2%. How does that happen? When people when there is more employment. When there is more employment in the country, what happens? People spend more, right? There is more employment, people are spending more. Everybody is happy, the government is making money, the banks are making money. Interest rates and inflation automatically cools off. It automatically cools off because people are spending more, right? So this is how fundamentals, technicals, investing, everything is interconnected and trading as well. It all depends on what is your end goal. If your end goal is to, build your retirement portfolio, this is what I will leave you with, folks. If your end goal is to build your retirement portfolio, if you want to, build your portfolio for long term, go for investing. Go for investing. Look to buy stocks, looks to buy bond, commodities, invest in ETFs, which is index funds. If anybody who wants to, make money in short period of time, but be prepared to lose money as well. Trading goes both ways, not just making money, but be prepared to lose money as well. Go for trading. Treat trading as your part-time job and not your full-time job. Trading cannot be a full-time job unless and until you're consistently profitable. And this is what Shazia and we have always been talking in our one-to-one sessions as well, that trading is something that nobody should take it up, as a full-time job initially. If you have a job, continue with what you're doing. Treat trading as your part-time job because you will lose money in trading eventually. Guaranteed you will lose money initially. Do not expect to make money from day one or from the first week or from the first month because trading is all about discovering yourself. You have to discover yourself. That is why I mentioned mindsets. There are two different mindset. Approach for investing and approach for trading is very, very different. Shazia, any last words, closing session that you would like to do?
No, I think I think the more exposure everybody gets, the more insightful. I think whether we choose to do it or not, it's valuable to have the knowledge about it. It gives people the right aptitude when they go out and look at decision making in whatever they're investing in. An interesting video I was watching today that the mindset, do you go and buy new iPhones and gadgets, or do you invest in stocks in those companies? Where, what is an asset and what is a liability? So many of us go out and spend a lot on liabilities and
Absolutely.
rather than thinking about building assets. And we need to have a diversified portfolio. So yes, so that we're not putting all our eggs in one basket.
Absolutely. Diversify your portfolio. And Shazia has given a really good example. I think I have seen this video as well, where somebody says, would you buy the latest iPhone or would you go and buy stocks, shares of Apple? Right? I think it's the same video that you're referring to. So make sure that even though if you have a good phone, make sure you invest in the products that you own, that you use. Like for me, if I use an iPhone, I go and buy Apple shares as well. It's not that I need to upgrade my phone all the time, right? Because phone is a liability, as what Shazia said. Buy stocks. This will give you profits. This will, make your life easier when you would like to retire. Yes, you not see profits coming in for short term, but in long term, you will definitely see a lot of growth, a lot of potential of how the markets are. And Jet Li, thank you for your comment. The leverage is more of a tool. Absolutely, it should be used with good risk management. 100% higher risk, higher reward. This is what I always, root by that. Never misuse leverage. Use leverage as a tool, but never misuse it. Use it, but never misuse it. If you have a leverage of 10x, don't use the entire 10x. Use 2x or 3x from that. So you're managing your risk properly. Thank you for your comment, Jetli, and thank you everybody for tuning in today. We will be back next Thursday as well, the same time. And the one-on-one sessions are again live. We are again the slots are open again for one-on-one sessions. So feel free to reach out to Shazia or QBN.
Yeah. Also, Krishak, we can mention if you're looking for a discovery call and you just want to get a feel of what is
Absolutely.
possible, you can also book in that as a complimentary call where you can speak to Krishak and find out, like I'm just going to give an example, Jetly, I'm not picking on you, but suppose, you wanted to have a call with Krishak just to find out where you stand in your mindset with trading and investing. That's a complimentary discovery call, and you can book those in as well, and that will help you make a decision, is it for me or not, where I am in my timeline, if you like, or where I need to go next. So thank you,
Absolutely.
Krishna.
Yeah. Thanks a lot, Shazi. And you don't really need to when you do the complimentary call, I just want to help you understand where you exactly stand in terms of your finance, right? Again, you don't really need to open up and tell you about your finances, but just to if you can give me a little bit of an idea, then I can help you decide what works the best for you, what's the next route. Because this is what I've been doing for the past 8 years, certified in investing, trading, technicals, fundamentals, psychology, done a lot of n number of certifications and examinations as well. So feel free to reach out anytime, and I'd love to, speak to everybody one-on-one as well. Thank you so much, folks. Thanks, Abrar. Thanks, everybody.
Thank you, everybody, and see you next week. And I can see lovely 17 people. See you all next week again. Thank you. Bye-bye.
Bye. Thank you.